Welcome to today's market report. European stock markets are seen opening lower on Wednesday amid cautious trading as investors digest comments from Federal Reserve Chairman Jerome Powell on another busy day for corporate earnings. DAX futures contract in Germany traded 0.5% lower, CAC 40 dropped 0.4%, FTSE 100 fell 0.7%. Fed Chief Jerome Powell kept a dovish tone during his testimony before the Senate Banking Committee on Tuesday as he attempted to ease some worries around higher interest rates and inflation. Powell stated that the US economy remained a long way from employment and inflation goals and that interest rates would stay low and bond buying would continue until there was substantial further progress. However, despite Powell's reassurance, some investors are beginning to pull forward their rate hike expectations, predicting stronger than expected economic growth and a jump in inflation on the back of the proposed additional stimulus will prompt the central bank to adjust its ultra-accommodative stance sooner than currently projected. Fed funds futures now project the first 25 basis point increase in the Fed's key rate by the end of 2022. The earnings season continues apace, with numbers expected from the likes of Accor, Wolters Kluwer, Lloyds, William Hill, Reckitt Benckiser, and Iberdrola. Oil prices retreated on Wednesday after US stockpiles unexpectedly rose last week in the wake of the severe cold snap, which hit Texas, the largest crude-producing US state, and the other southern states. Crude futures traded 0.4% lower at $61.41 per barrel. Brent contract fell 0.2% to $64.38 per barrel. Gold futures rose 0.1% to $1,806.05 per ounce. On the FX front, GBP/USD stands out with a surge above 122, buoyed by dollar weakness and also speculation that the Bank of England would raise interest rates sooner rather than later. Bank of England Governor Andrew Bailey and several of his colleagues will speak on Wednesday. Moreover, the British media reports that the UK may exit the lockdown sooner than the current end date of July the 21st. The cautious tone seen around the major could be mainly attributed to the overbought conditions on the Relative Strength Index, RSI, given the daily time frame. The boards are now contemplating the next move, with the 143 level still on sight. Although a correction could be in the offing before the cable takes a flight once again northwards. To the downside, the bears have to beat the daily lows of 141.06 in order to extend the corrective downside. The Fed's Powell soothed markets by promising support, weighing on yields and the dollar. Bitcoin's whipsaw continues, a delay in Europe's vaccine, and another appearance by Powell and fiscal stimulus talks are eyed. Jerome Powell told Congress that the outlook has improved, but there is still a long road to recover. He reiterated that any rise in inflation will likely be transitory and that the Fed has tools to deal with it. On fiscal stimulus, Powell said that he does not see how a burst in spending would lead to higher inflation. His words sent stocks bouncing from the abyss, with the S&P 500 closing higher on the day. The benchmark 10-year bond yields retreated from 140% and pushed the dollar further down. Powell returns to Capitol Hill on Wednesday, which is eyed by the GBP/USD traders. Eurodollar has been lagging behind its peers, partially due to the prospects of extended lockdown measures in Germany and AstraZeneca's announcement of yet another cut in AstraZeneca's delivery of vaccines to the old continent. The US economic recovery remains uneven and far from complete, and the path ahead is highly uncertain, Powell said on the Fed meeting. contradicting a widespread optimism that the economy will grow rapidly this year, leading to early Fed tightening. So far, however, the dollar has remained resilient, keeping euro-dollar sidelined near 121.50 and well within the range of Tuesday's indecisive doji candle. The European Central Bank President Christine Lagarde's recent comments on rising bond yields are keeping euro-dollar from cheering Powell's dovish comments. Lagarde said earlier this week that board members are closely monitoring rising sovereign bond yields, stoking fears of central bank intervention. The dollar index edged down to 90.032, sliding to a 3-year low against the GBP and recording losses against commodities currencies, as increased bets that the global economic recovery from COVID-19 will whet investors' risk appetite. This is today's market news. Thanks for listening. We'll see you next time.